Assalamualaikum everyone, my name is Amrul Syambi Abdul Rahman, and now we are going to explain to you guys about non-financial asset for investment. What is non-financial asset? Non-financial asset are physical items that people invest to grow or protect their money. Unlike stock or bonds, these assets are not traded on financial market, but they can still hold or increase in value over time. They also can retain or increase their value over time and commonly used to diversify investment portfolios or protect wealth. So basically, non-financial assets are things that you can see and touch, like house, gold, or art, that people buy to grow or protect their money. People invest in them to avoid putting all their money in one place and to keep their money safe, especially when the economy is uncertainly.
So let's go to the first type of non-financial asset, which is property. So what is property? Property means owning land or building to earn income from rent or selling at a higher price. It can be done directly or through property funds like REITs. Other than that, in Islam, it is allowed if the financing is Sharia compliant and the property is used for halal activity. It is also advised to have protection like mortgage reducing term takaful (MRTT). However, this investment has some risks such as low liquidity, high maintenance cost, long holding period, and tax like real property gain tax (RPGT). So let's go to the next slide, which is type of property. I have two type of property, which is the first property is tangible asset and the second is intangible asset. So the first intangible asset is, so what is the intangible asset? Tangible refer to something that is physical and can be touched and felt, such as real estate, machinery, vehicle, inventory, and natural resources. So let's go to the second intangible asset. What is intangible asset? Intangible refer to something that cannot be touched or physically measured. So, for example, intellectual property, goodwill, software and database, and copyright.
Number 2 is gold. Gold is a type of precious metal that comes in form like bars, coins, and jewelry, which are assets that can be easily tangible and traded. Even though real estate is tangible, it is not liquid. The company shares and bonds are liquid but not tangible. Tangibility refers to whether an asset has a physical form that you can touch and see. For example, gold, whether in a form of bars, coins, and jewelry, is a physical commodity, while liquidity refers to how easily and quickly an asset can be converted into cash without losing much of its value. Next, gold investment has become a trendy investment because in certain regions and of price of it's cheaper. However, investing in gold comes with risk, in which the spread value depreciations, especially due to its spread value, which can lead to losses if the value decreases. For example, when you go to buy it, the shop owner has a price for you. Let's say it's $2,000. This is the buy price for you or the ask price from the shop. Now let's say a minute later, you decide to sell that exact the same gold coins back to the same shop owner. The shop owner won't buy it back from you for $2,000. Instead, they offer you a lower price, maybe $1,950. It is the sale price for you or the big price from the shop. The difference between what you pay and what you can immediately sell it for is $50. This $50 is called the spread. Jewelry tends to have a higher spread value than gold bars. Before selling it, investors should check the current market prices and compare offers from different places. When the gold bars are simple gold, what you pay for is mostly just the gold, so the selling price is very close to the buying price. The spread is small, while gold jewelry is gold plus art, labor, design, and often other materials. When you sell it, the buyer usually only pays for the gold, ignoring all the plus stuff. This makes the selling price much lower than the buying price, creating a much bigger spread. Example, in investing in gold, people can invest in gold by either buying it physically and holding it on their own, or buying it by requesting the financial institution to keep it with them until the investor is ready to take it out. For example, in public emas gold fund and RHP
Let's
gold
talk
fund.
about community. So what is a community? Community refer to physical good or raw material that people invest in, either for consumption or for use in production. Some common examples include a agriculture product like wheat or rice, metals such as a gold or copper, and crude oil. Investing in commodities can be a strategic way to diversify a portfolio and protect against inflation. This slide shows the two main types of commodity investment, which is direct and indirect. For indirect investment, we are involved in purchasing the actual physical commodity. That means we need to handle the delivery, storage, and also make sure the quality and logistics are well managed. Meanwhile, indirect investment does not require us to physically handle the goods. Instead, we can invest through equity in a commodity related companies or by trading futures contract and other instruments in the stock market. This method is more convenient for many investors and offer better flexibility. Thank you!
So now we have reached to the end of the presentation, and the conclusion for non-financial asset for investment is gold, commodities and property are very valuable non-financial investment. They help protect wealth, fight inflation and diversity to a portfolio. Though they have risks like price change and lower liquidity, they offer a long-term value and stability. Including them in your investment can make your portfolio stronger and balanced. That's all from us. Hope you enjoyed the video. Thank you.